Paramount Global announced earnings a few hours ago, and I thought the earnings report was really interesting, especially compared to a lot of the other streaming companies and media companies out there. Now, Paramount is in the middle of a real battle for the future of the company. The CEO just stepped down. It's going to be replaced by 3 different division heads. It's very unclear what's going to happen with this potential merger with Skydance Media, or what the financial picture would look like for that company. So I want to dig through the results and not only take a look at one of the companies that Buffett actually has in his portfolio, but also look at how this positions other streaming companies, particularly Disney Plus, Hulu, and ESPN Plus, that bundle of streaming services, Netflix, and then the other kind of weaker companies like Peacock from Comcast. Because what I think we're seeing is a real bifurcation in the market. I have talked about this a lot on this channel about being the smiling curve. So look at the companies who are building a ton of scale in the streaming business. They're going to be in the top right of that smiling curve. On the other side is going to be small creators posting on YouTube, people like myself. They're going to be able to make money. But stuck in the middle is these companies that don't have the scale to compete with the bigger companies, so aren't going to be able to buy the best assets. And they're not small enough and nimble enough to create niche content like I'm creating here, or like thousands of other channels on YouTube. So they're just stuck in the middle and they're losing money in the process. And I worry that that's exactly where we're going to head with Paramount. That's the biggest reason I'm not investing in the turnaround of this company or any sort of merger arbitrage. But let's dig into the results and exactly what we know right now. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first go to the rumors about what's going on at the top of Paramount. So Skydance is the one that's trying to merge with Paramount. There's a lot of details here, but this is really a Game of Thrones kind of situation. You have the son of Larry Ellison, who runs Skydance, and then the daughter of Sumner Redstone, who built Viacom, which eventually became Paramount. And they're fighting over, well, who's going to control this company? What's it going to be worth? How much cash is going to be involved? So apparently another $3 billion worth of cash infusion has been thrown in to do things like pay down debt and buy back stock. But we don't know exactly what's going to happen. What we do know as of today is that Bob Bakish has been pushed out as CEO, and George Cheeks, Chris McCarthy, and Brian Robbins are going to replace him to lead the 3 business units for Paramount. So kind of a messy situation all around, and it should be no surprise given a company that's family run effectively at this point and is really falling behind in a lot of ways in the media business. But that brings us to financial results. And you can see some positives here. Paramount Plus revenue increased 51% year over year and reached more than 71 million global subscribers. Fun fact, their tech stack is so bad that I have been getting Paramount Plus free for about a year now. So please don't cut that off, Paramount, but not a service that I'm going to be paying for either. Direct to consumers, adjusted operating income before depreciation and amortization improved for the 4th consecutive quarter. So things are kind of moving in the right direction. Advertising revenue is up 17% and overall company revenue is up 6%. They are positive operating cash flow and positive free cash flow by about $2 billion, or a run rate of about $1 billion per year. Here's where you see the breakdown, and I'll get to each of these segments, but the TV business up 1%. This is the direct-to-consumer. This includes all the streaming businesses. That is up 24%, and then filmed entertainment up 3%. Still running an operating loss of $417 million, or 88 cents per share. That's really the thing that investors need to keep an eye on, because things are not getting better in the TV business right now. We're not seeing the number of subscribers to cable go up. We're not seeing the rates that they're paying go up. So that's going to be a business in structural decline. So unless you can make it work in the streaming business, it's going to be very tough to do all of these businesses at once. Direct to consumer, they're obviously going to highlight this because revenue was up 24% overall. Ad revenue up 31%. All these companies are trying to get not only subscriptions, but also advertising working. That's one of those things that needs a lot of scale to do it really well. So you can do brand advertising on a channel like Paramount Plus, but can be a little bit harder to do any sort of direct response or targeting unless you reach an even better scale. Subscription revenue was up 22%. And then obviously, as they highlighted earlier, Paramount Plus revenue was up 51%. So that obviously means that these other services like Pluto TV, BET Plus, things like that are not doing nearly as well as Paramount Plus. It seems like everything's moving towards Paramount Plus, which would make a lot of sense. Don't want to have too many names in the streaming business, but you can see revenue on the rise, but adjusted operating income before depreciation and amortization, so before those costs, still losing $286 million for just the 3 months ended March 31st. So the question is, can you continue growing your subscriber count, continue pushing those subscription prices higher? I think all of these companies have done that. We've been reaching a point of saturation from a pricing perspective. And then also, can you put more ads on the platform? These are the fundamental questions that all of these companies are facing, but it's not really clear that they're going to be able to get to profitability. TV media just continues to be a steady business, if not a phenomenal business. Revenue is up 1%, but they are cutting costs like a lot of these companies. So adjusted operating income before depreciation and amortization was up 11% to $1.45 billion. And films, as you would expect, are volatile, but they actually lost money on the films business this last quarter. This is again going to be one of those challenges for Paramount, because they're not going to necessarily be able to afford the same names, the same producers, and the same writers as some of these other companies who just have bigger checkbooks, the Disneys and the Netflixes of the world. Here's the income statement, and when you go through all of their costs, they lost $554 million in the quarter. That's that 88-cent loss. So not looking good from a loss perspective, and especially when you're not able to make money on the one growth business, and there's questions whether they're going to be able to turn that into a profitable business. That's really the challenge I think we see for Paramount. But you can see here the balance sheet, $2.4 billion worth of cash on the balance sheet. The problem is this number right here, $14.6 billion worth of long-term debt. That is just a massive amount of debt on the balance sheet, and it's not clear that the core business is even worth that much money right now. So that's really the problem that Paramount has from a stock perspective and from an operating perspective. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So I think the best potential outcome for investors would be some sort of buyout. And I think that's what a lot of people are expecting right now, is a buyout or a merger with Skydance. But it's not really clear what the terms of that are going to be, or whether that company is going to be better positioned in the future. I think ultimately what Paramount plus Skydance should do is just focus on creating content and then sell it to the highest bidder. Get out of the money-losing streaming business. There's only going to be a couple of winners in that business. That's just the way that all these technology platforms play out. You have one or two winners. We have that in search. We have that in operating systems. We have that in almost every case in technology. It's going to be the same way in streaming. There's not going to be 5 or 6 different subscriptions that people are going to sign up for. There's just going to be no appetite for that, because if you're the 3rd, 4th, 5th on the list, you're going to be the first to be canceled. You're going to have to deal with churn. You're not going to have as much money to pay for content. It's just going to be a very, very difficult business. And so I don't think it's going to be a moneymaker long term, but there is value in some of the content that Paramount Plus has that they could sell to a company like Disney Plus. All of that Paw Patrol content, that would make a ton of sense on Disney Plus. So I think that's where this company should head, but that's obviously not where they're going right now. But until they figure that out, I think we're seeing more declines. I think we're going to see more losses in all of these businesses. It's going to take a while for this streaming thing to play out, but I just don't see a profitable, sustainable future for them in streaming. And that's why I think there needs to be fundamental changes. And it doesn't just go for Paramount, that goes for Peacock and all of the other smaller media businesses as well. But that's my takeaway from results. It will be really interesting to see what things look like at Disney in particular. Obviously, Netflix's results were really strong, even though the stock market reaction wasn't all that positive a couple of weeks ago. But what do you think of the results from Paramount and the future of this company? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.